Hey everybody, Alex here, and in today's video we are talking about how to trade options on Webull. So go ahead, grab your phone, open up Webull, and let's get started. So the first thing that we have to think about is what stock do we want to trade options in? And I'm gonna go ahead and choose Apple for today's example. Apple is obviously a very popular company to trade in, especially options. They're very liquid. And that's one of the things that you want to keep in mind when first thinking about, all right, I'm going to trade some options. What do I go in? You don't want to go in a company that doesn't have a lot of volume or liquidity, because then you might have trouble making the trades. So Apple is a good example for today's video. First and foremost, when you open up Apple, when you click on any company, you're going to see a lot of information here. Now, at first, the information might be, a lot to take in, but everything is very nicely organized, and we're going to go through everything step by step. So first and foremost, you have the chart here, which you do want to look at, and I like that it has the 5-day, the 1 month, going all the way up to 5-year, and also the max, because this is very important to see the trend, sort of to get an overall idea of what the trend for this stock is. Now, if you're trading in a good stock, hopefully the trend is going up. Especially if you want to buy calls or something like that, right? You kind of want to get a nice idea of where the stock has been and where it's going. Now, obviously, looking just at the charts doesn't really indicate where it's going to go. I remember I used to do this when I was just starting out. I would just look at the chart and be like, oh, it's going up. Buy. And then it just didn't go up from there. So what I really like about this platform is that it has here on the bottom of the chart indicators that might be useful in technical analysis. So right now I have a moving average on. You can actually click over here and choose from a bunch of different frequently used indicators. Sometimes I would use things like the Bollinger Bands if I'm trading iron condors, or I would use RSI to see if a stock is oversold. But now scrolling down, you can see that it has order flow distribution and also large scale orders. And you can see the last few days what the large orders came in. So again, it kind of gives you an overall sense of the trend, of the vibe of, are people buying the stock or are people selling it? It might make for a good decision making when you're going into options. Now at the top right corner, you'll see high, low, and volume. These are just really quick details of getting a quick picture of the stock. But if I click right here, you can see all the information now pop up on the stock. And now you can see where the previous close was, the 52-week low, the market cap, 2.71 trillion. Who would have thought we'd see the day? I wonder if we'll ever get to a zillion. Is zillion even a number? Now, a quick note. I'm going to leave a link down below for you to grab 5 free stocks when you open and fund an account with Webull. All you have to do is open an account to get 2 free stocks valued anywhere between $3 and $300. Then, when you make a deposit of any amount, you'll get 3 more stocks valued between $8 and $3,000. So go sign up and claim your free money. Big shout out to Webull. And now let's get into some options. And now we're going to enter into the option chain. So go ahead, click on option over there. And now you're going to see the option chain. Now, this is what I'm going to do. I'm going to click here where it says 0D, so 0 days, just to close everything out so I can give you a better sense of everything to start, okay? Now, on the left over here, you're going to see the expiration dates. Now, this is the first thing that you should be thinking about when going into any options positions. What is my expiration date? So if I want to buy a call, if I want to sell a call, what is my expiration? Do I go 1 week out, 1 month out, 1 year out, 2 years out? And all of this is going to be depending on your risk tolerance and your strategies, right? I typically like to, if I buy options, go at least a few months out, at the very minimum, if not a few years out. And when I'm selling options, I like to sort of stick to 45 days, maybe 60 days, down to a minimum of 1 month, all right? So that's just something to keep in mind. So for this example, let's say we want to buy some calls in Apple. So let's say we're going to go to the 14-day strike price, which is the 18th of March, 2022. And we are going to click on that, and then the option chain is going to expand, and we're going to see the option chain right there. All right, the first thing that we're going to look at is the middle section here, the line going across right in the middle that says stock price, and it gives the current stock price. I like to take a look at this first so I kind of know where I am, where the stock price is, and above or below would be our in the money or out of the money options. The next thing that you're going to see is right down the middle is a list of strike prices, okay? And this is the second thing that we have to look at when going into an option trade after the expiration date. So I look at what's my expiration date, and then I see what strike price should I choose. So you can see the stock price in the middle, 166, and above it and below it are the strike prices. Now you can see that these strike prices are going in ascending order. So it's going from the lowest on top, 155, to 157, 160, and going until it hits the stock price, and then it goes higher and higher going down. Now this might be counterintuitive if you're used to something like Robinhood. So what I like to do is actually go to the bottom right corner, and you can do this as well, depending on how you like it. I'm going to click on the sort by strike price. I'm going to click on that, and I'm going to click on descending. And now it's going to give you a descending order of the strike prices, right? So now you can see the stock price in the middle, 166, and you can see above it, the prices are going up, and below it, the prices are going down. For me, this makes a little bit more sense, but maybe that's how I'm used to it. Okay, so you have the stock price, you have the strike prices, now you have your calls and your puts. And depending on what you want to do, buy a call, buy a put, you have your calls to the left on the left column, and your puts to the right on the right column. The next thing that we're going to look at is our in the money options and out of the money options. Now you can see very clearly it says in the money with an arrow pointing down, and in the money on the right side here with an arrow pointing up. Now you'll also notice that the highlighted areas in blue are the in the money options, okay? So this is a good way to distinguish between the two. So if I wanted to buy an in the money call option, I would look at in the money going down this section, and I know that the in the money ones are 165, 162, 160, 157, and going down this section of the option chain. If I wanted to buy an out of the money call, then I would look at the out of the money options going the opposite direction. So I would look at 167, 170, 172, so on and so forth. Now, if I wanted to buy an in the money put, well, there's the highlighted section, right? So in the money puts would be 167, 170, 172. Out of the money puts would be going down 165, 162, 160. Now, if you're not familiar with in the money or out of the money options, it's very straightforward. Basically, the idea is an option is in the money when it has reached the strike price already in the direction that it's going. And that makes sense, right? So if we look at Apple, $166 is trading for now. If I want to choose a strike price that's in the money, I go with a price that's below 166. And if I want to choose a strike price that is out of the money, I go to a strike price that Apple has not reached yet, right? It's out of the money, so 170, 175, and hope that it gets to that price. Now, one thing that I would suggest is that you can actually customize this a little bit if you only want to see calls or if you only want to see puts, because this might be confusing when first looking at it, calls and puts, and you have all the different sections. So if I click here on the bottom where it says both, I can click and it'll pop up calls or puts. So now if I only want to buy calls, right, I can click calls, and this way you don't get confused, and also this way it'll stop you from buying puts when you're actually wanting to buy calls. I've done it before. It's not a pretty picture, so you might as well just take advantage of this little option and only show you the calls or only show you the puts. So now everything is very clear. We have our stock price in the middle. We have our strike prices on the left-hand side. We know we're buying calls, and we have our in-the-money options below our stock price and our out-of-the-money options above our stock price. Now, what I really like about this is that it has all the details laid out on the option chain. So if I scroll to the right, we can see we have all our info of everything that we might need to make an informed decision on what to trade. So we have our bid-ask spread. We have the last price of the option, right? We have the mid price, which is between the bid and ask. We have the implied volatility, which is very important for options. We have our open interest, basically how many open contracts there are. Our delta, our gamma, our theta, these are the Greeks. Now, if you want to learn the Greeks, I have a whole video on it. You can click over here. And of course, watch my other videos on options so you can get a better sense of everything in case you're a little confused on some of these terms. All right, let's choose a strike price. So I'm going to go with the $170 calls. So remember, the stock price is $166. And I'm saying I think Apple is going to get to $170 by March 11th. So I'm going to click on $170. And you're going to see the order form pop up. And we have a bunch of information here. So let's take a look at what we're looking at. So obviously you're going to take a look. Apple is the company. You have a $170 call, expires 11th of March 2022. We're good. And we're going to see the chart here underneath. Now, this is the chart of the option itself, not the chart of Apple. So this is the option price, the premium, the contract, right? The price of the contract is charted out like this. Now on the right side here, we're going to have single option. Now if we click on single option, the information about what you're purchasing pops up. So again, we're buying the Apple $170 calls. We have our delta, we have our theta, our break-even price, because you always want to know that. The break-even price is your strike price plus the premium paid. And it shows you're buying one contract here at the $170 mark, and then everything in the green is going to be profit, so you have to reach at least 171.32. And everything down below it is going to be red, is going to be a loss. Now below that we have single option, so we can actually click that and go from single option to a whole bunch of different options, no pun intended, well, pun intended, I would say, of covered stock, straddles, strangles, verticals, butterflies, condors. My personal favorite down on the bottom, the iron condor. By the way, I did a whole video on the iron condor of how to do it, so you could take a look at that. Calendar spreads, so that could be for more advanced situations. So we've made the decision already that we're buying this option, right? But you can also switch it to sell. So if I click on sell, then it'll switch to selling the option. Now, of course, there's a big difference of buying an option and selling an option. Now, if you want to go more in depth on that, you can click right here for a full breakdown of how to sell options successfully. But I like that it says side over here. So pick a side. Are you the buyers or are you the sellers? So again, we said we're going to buy the option. So I'm going to click buy. Now, the main difference between buying and selling options, buying, you are paying a premium to buy the option, right? Because when we're buying something, we pay a premium. And when we are selling an option, we are collecting a premium because we're the sellers of that option. So I'm selling this contract, give me some premium, give me some money, right? Collecting premium. We have our order type over here, so we see limit, but we can change that to market order. I prefer a limit order because then you can put in the mid-range, and for high volume and high liquidity stocks like Apple, then you'll get filled at the mid-range. But sometimes you might want to just click here, click a market order, so you can switch it to the market order and it'll just buy at whatever price it is. This is a little bit risky because you might not get the best price all the time. At least start with a limit order, and if it doesn't get filled for whatever reason, then you can scale it back or just go with a market order. But I would suggest limit order. Now, if we click on limit price right here, you're going to see the bid price pop up, the ask price, and also the mid price. Now, in a situation like this in Apple, the bid-ask spread is very tight together, so you're not going to have trouble getting filled if you click the mid price, right? But in certain situations, in less liquid stocks, you might want to go more towards the ask side, what people are asking, to get filled right away. So, but for now, I'm going to go with the mid price and click next. We have contracts. How many contracts do we want? So let's say we just want one contract. Then it's going to show here on the bottom, estimated premium. This is a debit. So I am paying out when I'm purchasing a call option. It's debiting my account. So I'm paying $131. Remember, it's the one contract times 100 shares of the company, right? Because one contract controls 100 shares. So I'm going to make sure that all of that is okay. If I want to click two contracts, then again, you are now being debited $262, which is the limit price, the price that you're going to pay for the option, times 2. So you have $2.62 times 100 for 100 contracts. If I want to click on 10, you can see that again, you're going to have everything laid out really nicely. So I'm paying $1,310 for this contract, and it is debiting my account of this amount. 10 contracts, we have our limit price, and it is time and force. It is good for the day. So I'm going to just put it in, and hopefully it gets filled throughout the day. If not, it'll cancel, or I could put good until I cancel it. And I'm just going to do the day, and I'm going to click buy. And again, it's showing up all the information that you want. And again, this is just a final review to review everything before you confirm. You hit confirm, and you go in on the trade. Now, let's go over something that's very, very important. Let's click back to the option chain, hit both so we could see everything, and just take everything down a notch so we can see the expiration dates. Now, if you've been following my channel, you know that I like to buy options with at least 1 year until expiration, right? So in this case, let's even go 2 years out, and let's go to the January 19th, 2024 option chain, and I click here. Now, the option is gonna pop up. Now, you'll notice something. Say I think, in my mind, right, and this again, just an example, the stock price is at $166, but I think Apple is going to hit $250, right? $250 by that date, by the expiration date, but I don't see it here on the option chain. Well, this is what you do. You want to click on the bottom right-hand corner, these little slidey dots, and you can see the option list setting pop up, and this is where we can do a lot of customization to our option chain. So I'm going to click strikes over here, and I'm going to click to go see all the strikes. Now, you might not want to see all of them, right? but you might want to see 50 of them, 30 of them. I'm going to click all just so you can see what we're doing here. And I'm going to click back to the option chain. And now you can see that we have a nice big option chain with all the options possible that we can pick. So again, in the middle, we have the strike price. And now we can say, hey, I just want a call because I'm buying calls, and I click calls. Now I see all the strike prices on the left-hand side, and now I'm going to go to my $250 call, and I'm going to see $250 call, and there it is. I'm going to go and see, do we have good implied volatility, open interest, what's the delta looking like, what's the theta? Pretty nice. I'm going to click on it, and now everything's going to pop up. I'm going to just reassure myself that I'm buying with the limit. This is the price, $7.70. And click single option here on top, and it's going to give me my break-even price and everything else that I should know about this option. So I hope that gave you a better sense of how to trade options and how to put on trades on the Webull platform. Now, it is a very, very simple platform as long as you go through everything one by one and make sure you understand everything, right? I know at first it might seem daunting and you're like, I don't know what to do, help me. This is why we're here for, right? Now, if you are new to options, I do suggest you watch my other option videos. You can click here for the full playlist. I hope you learned something. I hope you enjoyed this video. If you did, you know what to do. Hit that like button and subscribe if you haven't already. And let me know down in the comments what else you want me to teach here on this channel. Thanks so much for watching, and we'll see you in the next one.